Welcome to The Lumber Word, where industry veterans Matt Beamer, Gregg Riley, and Ashley Buckholt dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everyone, welcome to this week's episode of The Lumber Word. We're recording this on the first day of May 2024. Our guest today, I don't even want to say guest, Charles De La Torre, Industrial Forest Products. Charles comes on once every few weeks and coming a regular here. Thanks for showing up, Charles.
Thanks for having me. I enjoy it.
I wanted to do the introduction to sound like I was doing the Saturday Night Live introduction with the PBS documentary. I don't know if you guys remember that one, where they were introducing the Schweddy. You guys probably don't remember that one.
I might be too young. I might be too young for that.
All right, no worries. So lots of stuff going on in the lumber world today, and great feedback when Dustin was on from Random Lengths last week, or I should say Fast Markets. He really brought the details around all the stuff we talk about. We'll probably expound on a little bit of that today. Market summary, I'll just give a brief overview of what I saw, and then we'll start breaking down a few things. Feel free to jump in at any time, fellas. So the market seems to have been selling off quite a bit. Gregg put his poll out last week talking about asking people, his LinkedIn poll. Please go to Gregg Riley's LinkedIn.
Yeah, the poll closed yesterday, so I've got. Let me see. Is it closing or is it closes in 37 minutes?
So why don't we talk about what question was on that one? Basically, is the market going to 450 or is it going to 650? Right? Two questions.
Yeah. I mean, it was basically after falling 505 weeks. Is it going to bottom or is the bottom going to fall out? And I made it a binary choice. You know, a lot of times I give too many choices and it muddies things. But I do have 37 minutes left in the poll, so this could change. But 55% said the market was going to 450 or lower, and 45% said it was going 550 or higher. I mean, I was hoping to get a 75 or 80% one way or the other, so I could know I want to go the other way, right?
Yeah, exactly.
I mean, all this says is it's like, damn, it's pick'em. So my conclusion from my poll is that we're going to continue to move sideways.
And that was POLL, your poll.
Excuse
correct?
me?
That was POLL, correct?
P-O-L-L.
Your LinkedIn POLL. Okay.
POLL, yes.
All right, right on. So let's just talk a little bit about what's going on in the market. As you pointed out last week, we had sold off almost $100 a thousand spruce related in the last 30 days. We continued this week selling off. Everyone was craving some type of announcement, which we got somewhat of an announcement. Somebody did something yesterday. We did the somebody did something announcement yesterday, but spruce seems to have at least stopped going down, if I can say that. I'm not even sure that's the case.
I mean, the way I describe it is it's trying to stop going down.
Yeah.
Trying.
That's right. But after some items like 2x4, I mean, you properly mentioned the other day, seems like all the items we're hedged on keep going down. That makes sense.
I mean, yeah, that's that. I've got a whole download on that for later in the show.
U.S. species.
That's going to be called the "Woe is me" segment.
Yeah, I got you. U.S. species, Matt. What's going on there? That's
just here in the last hour, we're finally starting to get some green Doug fir business, which has been really, really poor. Like yellow pine and green Doug fir are kind of the king of the species when it comes to strength ratings, right? And the West Coast has been wet and cold. I mean, it's 42 degrees when I come into work this morning, and cloudy and raining. It has not been a pleasant spring so far. And California's been getting off and on rain. Just the business out west has not been very friendly on the green specifically, and that's starting to get some takeaway and some volume today, like in the last hour or two, which is good. That's a good sign. We need it. The dry Doug fir and the dry hem fir business for us has been pretty good this week. It's very manageable if you just want to kind of get the tally that the customer wants. The pricing you can play around with. I mean, there's some give and take back and forth with the customers on prices. If you can give them the tally they want, that's also a good sign. So we're not having to win the whole argument, just some of it. And they're giving a little bit back. If we can get the tally, they'll pay the price. So that's a nice trade for us. And then our spruce business has been just kind of there. I mean, like, I feel like it's close to the bottom. We sold some 9s yesterday at a fairly cheap price, which, I mean, to me, that's like the guy that bought them, I think, is a bottom picker. You know, he's a smart guy.
Hope he listens to the show and he can, feel good about being called that.
I mean, he's no dummy, and he gets called by everybody. So if he's buying them, from us, then that says something in and of itself. I don't know. I mean, my business.
You never call me that, Matt.
Oh yeah, if you're buying lumber from me, I'm gonna go out and buy 50 cars of the same thing because there's something wrong. I did something wrong.
Yesterday.
That's right. You did. You hit the absolute home run, and we loaded those cars yesterday too, didn't we?
I know. I saw the invoices this morning.
Yeah, no, that was good. That's a good buy, honestly. If you think about it, that works back to like 320, 330, 340 mil for BC lumber. That's cheap. I'm not negative. I've had a decent week and borderline good. It's not great, but I've sold a bunch of trucks out of my inventory, which is kind of normal. I'm selling more cars this week than I had been. So I feel like maybe like what Gregg said, it's trying to stop going down. It's trying to bottom. We'll see in the next week or so. What I read into the Interfor thing is that's one of 4 or 5 different organizations that I feel have some pressure on them due to the yellow pine purchases and to what they paid for mills in the last 3 years and what the return on investment is right now. So I think that's the first of many to come. I think there's going to be a lot more curtailments, basically just due to financing.
Ash, what did we call that when we saw it yesterday?
Well,
a desperate cry for help.
Yeah, it looked like
and no disrespect to the fine people at Interfor.
Not at all. And I mean, it just seemed to me when I read into that and I read it where it says longer holidays, adjust shift times. It seemed like throwing a bunch of things out there. There's no hard shuts. It's just that we're going to rationalize through letting people work lesser hours. And I think in some cases, some Southern pine mills are already doing that. I was talking to a Southern pine mill this morning and asking them what they thought about that after they had just told me they were down at their new mill that will be producing 250 million board feet by the end of this year. And I thought to myself, I agree with Matt, there's got to be more coming, right? I mean, because there's still mills that are coming on with production right now. And that's the thing that concerns me on pine. But agreed, Matt, we talked about this after being up in Montreal. There was a sense that some of these mills were having to do something, right?
There's a lot of money spent. And so if your balance sheet all of a sudden doesn't look so good, because as I pointed out in our little corporate meeting today, I said, hey, for all the last 3 or 4 years, even if spruce was like down in the dumps,
yeah,
or hemp fir was cheap or Doug fir was cheap, yellow pine was still profitable for everybody, right? That was like the shining star of the party. That was the belle of the ball. And now it's not. Now
we flipped the script.
Now she's a dump. She's not bride material anymore. She's getting kicked out of the car on the highway as you're heading to your next date.
No, it's the person at your house party at 3 a.m.
Yeah,
after the
time to go home. I wouldn't know what you're talking about. You want to explain that?
I don't know if they still have houses. Well, so Southern pine, Charles, world you live in. What you listen to us talking about it? What's your thought on it?
I mean, I agree with the general sentiment, right? I mean, the fact of the matter is we have too much finished good in the supply stream. What Interfor came out with and the volume that they are trying to take out of the pipeline, I don't know if it does much for their top line production, right? If you look at it as a whole, it's not very much. Number one. Number two, the house of cards just got one leg weaker. So somebody else is going to have to flinch and maybe flinch harder due to that lack of ROI on those heavy investments, right? I mean, you got guys that bought legacy mills and upgraded them, put in new planer mills and 60 bay bin sorters. How do you make your money back when you're selling, $270 number 2? It's tough. It's really, really tough.
What have you seen in the Southern Pine market this week? What have you seen after this announcement? Have you noticed any bump, firming, anything?
I think everybody's waiting for the other shoe to drop. Nobody's in a rush to do anything. Because you still have, I mean, you got spruce that's trying to stop going down, right? And, you know, if you talk about that net mill number that Matt just mentioned of, you know, sub 350 BC wood, it makes it real difficult for anybody to get excited to do anything because there's not very much downside risk here. So when the other shoe drops, or if the other shoe drops, whoever that may or may not be is going to determine how this market moves forward.
Yeah, it's a good point. I think Matt had a good thing. I had some more carload inquiry today too from normal truckload buyers. I think people are saying, hey, if this is near the bottom, I might as well buy a car because it helps my cash flow because it's not going to show up for a month, right? Or it's not going to ship for a while.
I mean, I'm going to do something that I don't do that often.
You're going to call a turn here?
I'm going to tell you that lumber prices are going to be higher 60 days from now than they are today. I'm going to jump up on my desk and I'm going to go buy because lumber prices are going to be higher. These are long-term unsustainable prices. And listen, smart money is going to look at that. I had a conversation today with a big buyer. Said, oh, yeah, we just got all of this builder's business for the next 3 months in a region. You know, 120 houses a month. They're locked in for 90 days.
Yeah.
I have 3 multifamily jobs in front of me. Hey, we want to buy this. This is the stuff that's going to make that happen. I mean, hey, we talked about it for the last few weeks. The market's really oversold, blah, 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 blah. The point is, hey, it's trying to turn right now. It's going to take probably the next 3 weeks for it to be apparent to everybody that the market's turned. Then you're going to have a nice run from, mid-May through mid-July. Is it a $50 run? Is it a $100 run? Is it a $150 run? I don't know. I don't know. But it's going to be higher.
Something does have to change, though. I mean, you're 110% correct. And at these levels, if you need it, I'd buy it, right? The specific example you just gave, Greg, whoever that may be, they should just step in and do what they have to do and move on about this.
Just so everybody knows, go ahead. Sorry, Charles.
The one caveat I was going to say to that is if they jump in and they buy at these levels, because they are locked in on 90 days, and they got to compensate for that cost to carry, are they going to be back in the market before July? Do they just step in and buy one time big and then market moves $15-$20, moves ahead of the market consumption, then all of a sudden it comes back down? So that's the follow through is really the worry. And I say that from what to kind of piggyback on what Ash said as far as another mill coming online to cut another 250 million board foot, right? I mean, if you've got a market where there's steady takeaway and people are continuously selling above their production levels day in and day out, you have a healthier market. But as soon as that tailors off and you have 2 or 3 days where you're selling 70% of your production, that adds up fast when you're talking about a billion board foot and you have a 7 mil footprint. That's where the caution needs to be placed, right? From a sales perspective at a mill level, right? They need to try to sell into it and look at this from a non-historical standpoint and do something different. And we're having conversations with our partners to kind of look at it from a different perspective to bring more value, not only to them, but to our end users as well.
Yeah, and one thing I know on the spruce stamp side, I could talk about it, and probably on the pine side also. And Matt and I have talked about this. What's the one thing that mills have to do first before prices can go up?
Order file.
Period. Right.
Order file leads price.
Order file leads price, and I think that didn't happen 3 or 4 weeks ago. I think some mills actually speculated on a price move earlier, held back a little bit. And it didn't happen. And we are where we are today because of that. I think they're a little bit more educated on it now and are going to build a bigger order file out. The only way they do that is take almost every firm offer that comes at them until they're 2 to 3 weeks out on some items. And then when I was down at a couple events in Texas, meeting with some Southern Yellow Pine people, the one question that every buyer kept asking them, they said, and these are some young kids at one of the mills, and they were wide open with information. just tell me when you're out past 2 weeks. As long as you're only 2 weeks or sooner on your inventory in the ground, I'm not going to speculatively buy any pine. And once you start getting out 3 weeks, then I'm concerned, and then I need to start buying some more stuff. And I think we're probably gonna see that.
I don't think we're going to see, to Charles's viewpoint here, what you were talking about. Are we going to get a big buy? I don't think so. I think we're going to get a 30 to 45 day buy, not a 60 to 90 day buy. And I just think that's going to be how it is for the rest of the year, regardless of what the mills do. So if the mills curtail, great. If they get the money moving around, great. Do I expect people to come in and buy like hand to fist and load up through like mid-July timeframe? No, I don't. And the reason is just the cost of money, right? It's just interest rates. And I don't think that the customers are going to change their strategy. It's been working for them now for 2 years. What am I going to do as a speculator? I'm probably going to carry less inventory going forward for the rest of the year. I think that we're in some choppy water situation, but I do like the volatility of the market. I like this movement up and down. And as long as you manage your inventory and keep an order file, I guess like Ashley talks about, just keep selling all the time, you'll do fine. It's when you want to fight reality that it really hurts you the most, right? And this is where the mills make mistakes. They get complacent. Over a period of time, the orders come in relatively easy for them, and then they just think that they're going to outsmart the market, and they'll shorten up their order file on purpose because they're going to get higher prices in 2 weeks. And then that doesn't happen. Then they lose $50 or $100 for the equity. All of a sudden, they have no order file, and they got to start taking any offer that comes across their desk.
Like what happened the last 5 weeks, you mean?
Right. And we joked about it before we went to Montreal. Ashley, you and me joked about how they were going to like get all excited and tell us what we're paying and blah, blah, blah. And it didn't turn out that way, did it?
Exactly opposite.
Specifically because mills stopped selling for their order file at whatever the market would bear. Meanwhile, I'm out there selling my inventory at whatever I can get for it, trying to clear space, knowing that I'm going to go away for 2 weeks in April. Lucky me. By sheer luck, I happened to get on the right side of the market with my inventory.
Always better lucky than good, Matt. Always.
So this will segue to talk a little bit about futures and cash. Leaving Montreal, and I said this last week, leaving Montreal, I would have thought people would have heard that tone from the mills or seen that. And what they did is they came back, and looking at the commitment of traders report, industry people got spec long and literally did the opposite and got spec long when all the indications were the market was dropping. So if you think about it, and funds got short. Everybody was talking about how the funds got to blow out, blah, 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 and don't agree with any of that. But one of my things are, when are the industry longs that got in, don't have forward pricing behind it, are just speculatively sitting there with the long paying margin every day to the people that are short and hedged? When do they throw in the towel, or do they? And I really thought, when I was talking about the tone of the market, I think people still have hope that it's gonna rally. But like,
Ashley, you know what happens when you have hope in one hand and shit in the other, and you put them together?
Yeah, you have a shit sandwich.
Yeah.
but I mean, Greg, you said
hope should never be in the conversation of trading. If somebody
Well,
ever
that's an
says
emotion.
they hope something,
That's an emotion. You
Right.
can't do
that's
that.
like
It's an emotion.
that's an emotional feeling, and there's
Yes.
no place for it at all.
Talking to my futures guy yesterday at length about the state of the market and where we are, and we were talking about statistics and all kinds of stuff. He thinks most of the industry longs have been taken care of at this point, and that we're going to run out of sellers. That was his personal opinion about the market. That's why, along with what Gregg was talking about earlier, it feels like we're trying to bottom out here. Well, the first step is you have to build an order file. You got to start taking offers. You got to move some wood. Second step is for the people that are just wildly selling the futures board to actually have to start pay a penalty, or at least fear that they're going to pay a penalty for that behavior.
yeah.
And we're in that little stage right now where we're trying to form a bottom, and the industry doesn't have any more panic selling to do. So,
Well, but Matt, I mean, the commitment of traders says the opposite. Okay, the commitment of traders says that the industry is long futures and has been getting longer as the market's fallen the last $50, and that the funds are short futures and they just keep making more money.
well, would you rather
That's
own the
what
board
the
at
commitment of
500
traders says.
or be short the board at 500?
being short the board at 500 is not a problem because the market's 475. So you're in the money, and that's right, you can roll it from 500 to 530, and I'm thinking $45 or $50 is a good basis.
I understand that. But I mean, there's people that are taking delivery of the lumber for, panel plants or truss yards or whatever, and they're converting it to MSR. They're converting it to something else. Maybe they're doing a hedge on an apartment job or something that they sold 30 days ago. I don't know exactly why, but it makes sense that as prices fall, the commitment goes up, right? Isn't that what lower prices are supposed to do? Isn't that their function? Bring in more business?
Yeah, I guess my question though too is if we're talking industry spec longs here, I think, right? So
You
Yeah, he's talking position specific, Matt.
Oh, yeah,
And
yeah.
that's where the rub is.
If I was, I would rather be long at 500 a day, but I'd be questioning myself if I was long at 560 and it's
Right.
500 a day, right?
Yeah, well, but
Then
haven't they blown out? You think that they're still holding on to their 560 longs?
I do. I think there's
I'd
still
be
some
shocked.
people that haven't thrown in the towel yet. Although some of those longs that look like they rolled last week, I could be. Look at every buyer. There's a seller. I don't think we've seen the capitulation yet, but we may not see it either.
I don't know. Based on what I sold Gregg Tubasics for yesterday, we sure as hell have seen capitulation. You don't know what the you're talking about.
Oh Lord!
The crazy thing is, along the way here, I mean, there's some things that I thought were like tremendous buys, and now I look at them going, I paid what for that? What was I thinking?
Yeah, we've been.
I had one of those moments too, Riley.
We've been buying all the way down, Matt. We paid more for 2x6 for sure too.
Right? It's okay. Let's talk about futures real quick because there's something on my mind I want to get off.
Kick it off. Start off, Matt.
When we were in Montreal, I had a bunch of people ask me about futures. People that should know a lot about futures that don't. Corporate executives, and I kept getting asked, "How do I do it? Isn't that speculation?" Trying to explain to them that what I do, which is I'm a hedger. Okay, I don't buy the board and try to take delivery on it unless it's a really good deal where I can convert it into something that I actually want.
Yep.
And I have taken delivery of the board and I've done XPITs and basis trades before, but that's not my primary function for what I'm doing with the board. I look at the board as a hedging tool to protect my inventory, which has a fixed cost, right? In fact, my inventory has a higher than fixed cost because I get charged storage fees and I've got to pay for interest payments to Hampton to borrow the money to finance my inventory, right? If I've got several $1 million tied up in a credit line, if I don't perform well, I got to pay for that money, right? So my inventory cost is constantly flat or going up. And yet I look at the board not as a speculative thing. I look at it as a mill. Okay, this is the teaching moment. If you can view the board as a sawmill, and you think, okay, we get at 600, 610, 620, 630, 640. These types of numbers start appearing out there, high 500s. Those are profitable numbers for a sawmill in Prince George, right? You're locking in a profit if you sell that. So if you see that kind of stuff happen, just pretend you're a sawmill. And I talked about this publicly 2 months ago when we were at 630. I said, what sawmill wouldn't want to sell September at 630? I specifically said those words. And that's because I think of the board as a sawmill. Don't try to day trade it. Don't try to be speculative about it. Don't try to outsmart it. Just when it gives you a gift, take the gift.
No, Matt. So I was talking to a guy that used to run a big mill, and he said, "Hey, I think the CME is more for distributors instead of mills." I'm like, "What?" Like, huh? He goes, "Oh, it's better for distributors." I'm like, said the same thing, Matt. When you can sell at this, why wouldn't you? I can't wait for an analyst, any analyst on this podcast. When you're talking to some of these, and some of them do it, but why isn't open interest at 40 or 50,000? Why are some mills reporting on losses and they don't hedge anything, right? Like, why do they never get challenged in their quarterly reports of why didn't you hedge? Why don't you look at it? And to me, the it's not meaningful enough is a really bad answer.
Ashley, you've got a friend that's a hog farmer.
Yeah.
Is he a pretty smart guy or is he just a hog farmer?
Which one? No, they're both smart.
Okay.
All my
Okay. Can we
he-
rate them, Ash? Can we
does
rate
he-
each one?
Do they
Okay.
use their futures contracts to hedge their hog farming activities?
Absolutely, they hedge both
Okay.
sides of it. They hedge.
So if a
hedge input
goddamn
and
farmer
out.
that raises hogs can figure out how to hedge his hog inventory, why can't you, Mr. Lumber Guy, figure out how to hedge your lumber inventory?
Because I don't think they know how to, Matt. Actually,
Well, I think Matt hit the nail on the head. It's a perspective thing, right? I mean, people look at it from a raw material log to lumber. They don't look at it from the actual market participation that they do day in and day out. And you're exactly right. When the market gives you a gift with a bow on it at 630 and you don't sell that, somebody would be asking questions. I mean, in my organization, and we're not monstrous by any means, but if we had the opportunity to do that and we didn't kind of execute on that, there would be some microscopes.
And Matt, the other thing I've heard is we tried it before and lost money. I'm like, huh? I'm like, who was doing it? And what was your game plan and how did you do it? Right? Because what generally happens is somebody pulls the panic button and forgets about why they did something. But if you're the spruce game or other species, it's a great tool.
If you're a basis trader, short hedger against inventory, like you want to lose money on your futures. If you're a sawmill that makes, X number of board feet and you have a hedging program, 10%, 20%, 30%, whatever that number is, you want to lose money on your hedge. That's what you want to do. You don't want to make money. If you make money, that just means that the rest of everything else is shit. Is Dave going to have to cut that out? No, that's okay.
No, the S was
you're a
tame.
speculator. You're speculating to make money, right? I mean, that's what you're doing.
Yeah. I mean, I've asked Gregg to buy our hedge back since 600. How many times have I come in and asked you to do it, Gregg?
Yeah. What do you think? Well, no, it's premium to the cash market.
So let's talk about that. May's at 490.
No, it's a premium to the cash market.
Yep, May's at 493. July's at 526. How much of a premium are we right now in May? Where's cash trading at right now?
340.
Matt, I mean, 475, 480.
I don't know. I'm still getting orders around 500 to 510 on stuff that people want to buy. So maybe if I had a gut ball crappy tally, I'd have to go down to 480 to sell it. But
so
because you got 18s and 20s, you got better than average wood, right?
I think I'm not the right guy to ask necessarily.
You look at July, you got is that a $40 basis ish?
It's 405. It's 530, isn't it? No, 526.
Yeah,
$33.
So I mean, that's telling you to keep your hedge on right now, right?
Yeah.
Yeah, I mean,
they're paying you to roll.
You buy lumber now; it's going to ship in a couple of weeks, and you sell July. And the other thing is you got so many items that are undervalued to the hedge. That's the thing that's crazy. We went through this, Ash, a couple of weeks ago, I think it was. We sat down and, we were talking about, hey, what can we EFP? And I'm like, I'm giving you numbers and you go, man, those are really high. I go, yeah, well, because everything's cheap compared to the board. Everything's cheap compared to the board.
Do you want to go off on your little conversation, your little rant about the basis and what's overvalued or undervalued?
No, I just want to. I'm trying to figure out which university I want to go out to and see what the fine folks are doing today.
Well, there's one right down the street from us that just negotiated to pay everybody.
We don't negotiate with terrorists. We don't negotiate with terrorists. Okay, we do.
So one of the followers on X, when we were talking about the market potentially with the curtailment yesterday, he asked a question. Said, odds are that builders, or I don't know if this was a statement, odds are that builders or end users are hedging low prices in here. Talk about how. So let's talk about that. How I almost did a Joe Biden. I almost said what I had written down for a note. We want to talk about.
Pause.
Hey, come on! You're going to alienate half the audience.
I almost did a pause. So I just started reading it.
Lord.
So the way I explained it to him is, people manage risk every day, and what they do in this industry, depending on where you're in the chain, this industry is all about pushing risk to the next person and who wants to wear it and who wants to hold it, and everybody gets charged for it, right? If you're building homes, you go to your yard or your supplier and you tell them what you want to pay. They lock it in. They take it and then go find somebody else to wear that risk, or they may wear it. I don't know of a lot of retail yards that do that themselves, but a lot of people are managing risk. They're just doing it through the right way term, a third party that charges them through the price that they sell them the final product at. That third party then wears that risk. Us sometimes being those third parties, Gregg, Charles, Matt, myself, we provide people with risk all the management all the time. And then there's other people out there doing swaps, people out there just short selling and holding it and hoping. But I think the important thing is, even though some people may not use futures, they actually have other people go out and do that through the way they price them. That make sense, guys?
Yes, there's always risk in our business, which is what makes it interesting, right?
Exactly.
I'd rather do this than sell computers.
Yeah. Or a guy that called Gregg today and tried to sell him silver and gold on the phone call.
Oh yeah, that'd be
Oh
fun.
boy. Like, and I was
I wish I was a fly on the wall for that one.
You lit the guy
God
up.
almighty.
No, I love it. Starts to go, yeah. So when we talked 8 months ago, I go, we didn't talk 8 months ago. Who did you call? You didn't call me. So he starts going as I go like, well, if you'd called me 8 months ago, I would have told you the same thing. Take my number off your list.
Hey,
You're so nice.
One quick
You
thing.
should
I
have
know
said,
it.
like,
And that's what
you
I
should
said
have
to Ash.
acted
I
like
go, I
super
was actually
interested.
nice to him.
Yeah.
One thing we didn't touch on, Euro. What's going on in Euro? I mean, they just dropped a 5-mile long train into the Cape a week and a half ago.
Hold on. What?
So it was 30 some million board feet on a vessel.
Oh, okay. You're talking about the vessel that came
Yeah.
in. Okay, yeah. Okay.
And it seems to me there are a lot of items, the same 5 items that we always do stuff with, and people are positioning themselves. I think from listening to some people, there's going to be potentially less Euro going forward as we sit here in pricing. But that probably won't be evident until the next 2 to 3 months. Thoughts on that?
There's no money to be made in lumber right now, whether you're in Europe or North America.
Yeah.
So if there's
Zero.
no money to be made, if you're a producer, then your only option is either to just sell at massive losses and just lose money and run cash negative, or stop. That's
Yeah.
it. You don't have any other choices.
There's European producers that are committed to the U.S. market. It's a percentage of their overall cutting profile, and it helps them to get more money for their other lumber by having it. I'm not going to use the D word, but the North American market is a place to offload that volume. And so, those people that are committed to the market, they're going to continue to ship here. I mean, we talked about it before. European shipments were down a little bit last year over the year before. They're going to be down a little bit more this year from last year. I thought that was an interesting stat, Ash, that you brought up the other day, about how much yellow pine production is down year to date versus last year. What was the number?
That was Dustin's stat, right? I think he said 8%.
I'm real curious
Well, I
as to
brought
where
this
you
up,
got
Charles.
where you got that information from. I mean, you've got guys that are upgrading mills. Once again, no return on capex ROI. You got new mills coming online. Ash, you just talked to somebody else.
Yeah.
Guys tied to tax responsibilities due to greenfield operations. I mean, it's hard for me to wrap my head around that, honestly.
Yeah, I was shocked. I was shocked when he
said. The price
said,
doesn't tell you that, right?
No, it does
Right.
not at all.
Yeah, that's a good point.
Let me ask you a question, Charles, because you're in the yellow pine business.
I charge for these.
You can compare your April stats of 2024 to your April stats of 2023. And is there a big change in your volume of sales? Not the dollar value, but are you selling less?
No, we're selling more.
Okay, so you're selling more, and that goes along. That's directly opposite of what he was saying about production being down. If you're selling more than a year ago, and production is down 8%, you would think the price of yellow pine would start with a 5, not a 2, right?
Agree 110%. But I
So
think
something's not adding up there.
well, I think a lot of it has to do with market share, right? As we continue to grow and we add more value add to our programs that we put together, we're
You're still
garnering,
growing.
yeah.
Well,
I mean, that's aggressively. And that, I think that's the big thing, right? It's not like you've got multifamily up, right? I mean, we're down per Gregg stat 38% year over year. Single family strong, but you know, the footage and the number of sticks per house is down. I don't know what that exact percentage is, but I'd imagine it's 10 to 15%. And then, you know, there's nothing new going on. We're just more aggressive. We have more value add, and that's why we're selling more volume. But with a production drop of only 8%, once again, to your point, Matt, you would think that somebody somewhere else is doing the same thing and growing their market share, and they would in turn be in the market more often, buying more wood, which would raise the price and reduce supply. So it doesn't, I don't know where that stat came from, I guess is what I'm getting at. And I'd be real curious to know the source.
We'll have to dig deeper into that. One interesting thing, a Euro producer I heard the other day say, with the customers they have, they used to be 80% negotiated at the time the wood lands, to now almost 80% firm price from their customers. Think about that. Think about how that's changed in the last 3 years. And probably because where we're at in the market. So if they used to have 6 customers and they were all some type of, and one of them gave them some firm prices every now and then, the rest of them were all, you know, priced negotiated when the wood lands. They're like 80%, 5 out of 6 or higher of their customer, 5 out of 6 of their customers are now giving them firm numbers, and that's what they want. Right. And the reason I'm saying that is that's an interesting dynamic and change. And that could also increase the open interest on the CME, if you think about it.
Should.
I would like to see open interest increase in the CME. I would like to see more people in our business use it as the tool that it is, and not be afraid of it.
Why do you think that
now,
is?
this is like the highest open interest that we've had in the new contract.
There's no excuse for our business to be less savvy about financial hedging than hog farmers and soybean farmers and corn farmers.
Gas stations. I mean, right? I mean, I agree. I agree. All right. Before we go into our married date dump segment, are there any items we didn't cover?
Let's do it.
All right, let's do it. Let's go into marry, date, and dump. And anybody want to raise their hand and decide who wants to go first?
Charles does.
Age before beauty, Matt. Age before beauty, my friend.
I'm actually buying some stuff for inventory right now. I'm not marrying anything per se, but if I was going to marry something, it would just be studs in general. I think they've fallen so far. You know, now like you can basically just go back to yearly low prices, and I don't, as a general rule of thumb, I don't mind buying yearly low or multi-year low prices of anything. And it doesn't have to be lumber; it could be cotton. You know, so I look at the stud business as something that I want to buy the studs, not sell the studs per se. And I think those prices will definitely be higher in 60 days on across all the 2x4 studs, I should say. Some of the 2x6 prices probably need to come down a little bit more, but 2x4 92s, 104s, 116s, I'd rather own those than sell them. And then as far as dating, I'm just dating my 2x4 number 3 utility business. You know, it's there. I'm still relatively busy on a day-to-day trading basis, but I'm not marrying the idea of going out and buying 40, 50 cars of this stuff right now. You know, I'm bumping into number 2 on some things. So I'm just, that's management buying is what I'm doing there. And then as far as dump goes, yeah, I don't know. It's hard for me to want to dump lumber right now when we've just dumped $130 of value out of the price of everything. And you got major mills announcing, you know, layered curtailments over a period of time. I think there's more of that to come. So I guess if I was going to dump anything, it'd just be bad lengths out of my inventory that I don't want anymore. You know, just take, you know, bite the bullet, write them down to a price that's going to, you know, guarantee you can get rid of them and just move on and don't buy them again.
All right, I'll jump in. So marry wise, I don't trade very much of it, and I don't want to steal anybody's thunder, Gregg. That's why I'm wondering if I was going to marry something right now. A smart guy tipped me off of this morning. it would probably be 2x4 number 2 pine. And like, it would be a quick, because she wasn't even on my mind yesterday, or it wasn't on my mind yesterday, but all of a sudden I came on in today and it was on my mind. So this is like where you see the person and you're like, I want to marry that. Right. And why do I want to do that? I mean, my God, if you look at, I think if you see where the curtailments or the closures are going to start happening in the South, and probably accelerating, that basis has got to come in at some point. That's one thing we're looking at. 2x4, 104 and 5/8 stud. These are all things I hated a month ago, but now I have to be married to them because I am. 2x4, 104 and 5/8 stud, 2x4 16 and MSR and number 2, because of its, first of all, discount to Random Lengths itself, and then its discount to the CME. At some point, that trade's going to work. Date some items that I can flip, 2x6, 104 and 5/8 number 2 trucks, odd trucks of studs. Dump. There's nothing I really want to dump, unless if I did trade OSB, that would probably be on my mind doing it, because I don't even know if they can record how fast that's peeling off right now. But I just saw
we need more information about OSB from Charles.
Yeah, that's a neck breaker there, fellas.
Yeah.
I mean, it's tough. It is. I mean, we've seen $100, $130 discounts delivered to print.
That's crazy. It
cracked Friday.
Yeah.
And I mean, you're talking what? If that you put 130 over, I mean, that's a 20% price change in 4 days.
Wow. And then remember we were talking about this 4 weeks ago, when this does crack, it comes off $100 to $200. That's just how it trades.
Yeah.
That's wild, just how it trades. Gregg, Matt.
I already went. It's Gregg's turn.
Gregg.
Matt already went. Charles.
Let's see. Mary, low grade pine. It's cheap. There's some industrial demand coming back on. We moved quite a bit of it over the past 4 or 5 days. So that's been good for us. Obviously, also married to any type of Southern Yellow Pine trim for various reasons. But, we've had steady takeaway, and we've been able to establish an order file like you discussed, which is a direct indication of pricing. I mean, our order file right now is at 45 to 60 days. So we're pretty steady on takeaway and follow through there. Dump, Euro, if we're being honest. Euro has a big inflection point in the Southeast based on the number of ports that it shows up at and just the sheer velocity of things, how they change, right? And that goes into, what you touched on, Ash, as far as fixed pricing and, some of it being obligated pre-selling, so on and so forth. And now there's not that capability to have the liquidity beforehand. Everybody's kind of just waiting and seeing. And that's kind of muddied the waters in some of our other segments of our business, which has made it extremely difficult. I know Gregg doesn't like that answer. I can see him shaking his head.
I mean, I just think, with Euro, I mean, we had Thomas on, a few months back, and, like he highlighted is, the problem with Euro is plunk, right? When you plunk 30 million board feet all at once at a place, then that's going to put pressure across that. And then, after that dissipates, then it kind of floats back up. It's a perfect example. If you see it,
that's graphic.
Oh no!
Yeah,
you got the visual.
Ash,
did you get the visual?
Yeah.
Okay. But I mean, we looked at this. We can look at an item. It's like, oh yeah, 2x6 116s are really great. And 90 days later, after they've dropped $250, $300, right, to sell the last 20 out of 200 trucks of them in a market, and then as soon as that last truck's gone, the market's $100 higher the next day.
Yeah.
So, I mean, that's just the dynamics of the Euro market is plunk.
Well, I think you've got too much wood coming in too many different ports, honestly. Because I mean, you think about Florida. You got Cape, you got Mobile that feeds into the Panhandle that can also go into all of Alabama, Western Georgia. Then you've got Wilmington, North Carolina, Savannah, and Charleston, and those all service the same regions. So on top of the plunk,
Tampa, Lake Charles.
I mean, you've got too much diversity. And that's why that market gets so sloppy and you see those $100 price swings, right? Because somebody might have a buildup in Mobile, and they can take the I-10 straight across to Jacksonville. Yeah, your freight's less out of Cape, but they're willing to get rid of it because they got 10 trucks and you got 2.
Right.
And they're going to be $55 cheaper than you. Or they can come down from Savannah for $600 versus 7. And there's a big disparity there. And I think that's part of it. If it was a little bit more centralized and to kind of compound that plunk, right, it might actually behoove European mills to do that.
Plunk is the new word that's going to start going through the industry.
The word of the week is
good
plunk.
job. It's plunk.
The word of the week.
Well, hey, look at 2x4 16s. Look at 2x4 16s. We were damn near pencil trimming 16s for 14s because there were so many 16s sitting down in the Southeast and no 14s, right?
Ashley, you sold 14s $100 above what we, maybe $90 above what we sold 16s for.
Yes.
So, in terms of Mary, I mean, this is, and I'm going to share this with everybody. Basis trading, there's sometimes when things just don't work out. And I'm going to say, I've got, I kind of got a boat anchor right now. I've got basis trades on 2x4, 104 and 5/8. They went discount. I got basis trade on MSR spruce. I mean, when I bought it as my exit point was 2 and better. It's not going to be terrible, but it just doesn't feel fun right now. I got some 2x4 16s on that if I don't get some help over the next 60 days, Ash is going to go hungry.
Hungrier.
So, and I mean, that's the thing about like basis trading is that, sometimes it just doesn't work. The basis was, eventually everything works, but you sometimes you have a choice to make. Just close your trade out and move on, or you can roll a trade. That's something that you can do. Just stay.
Greg, it was certainly better being hedged on those than outright cowboy long.
Right. Oh, and that's to my point is, I went buy. Part of that's driven by my fact is I look at things and I go, if I can hedge undervalued items and July's, $30, $40, $50 over today's cash market, I have a built-in customer as a distributor, right? My flip side is, hey, if you're a home builder, like, why would you not want to lock your prices in? I mean, I don't traffic in, hey, there could be forest fires, but
everybody else has been doing that.
Right.
That's why
everybody else is doing.
Well, you're slow to the party, buddy.
I don't traffic in, hey, there could be a rail strike, but I just got a couple emails about it. That's no, I say there's no way you want to trade based on that, but those things are out there. So when you're at, below the cost of production, long-term unsustainable prices, your risk reward just to lock in is very close.
So Greg, I have a question for you because you and I have both basis traded for a long time. What's the longest that you've ever had to hold on to a trade before it kind of made sense? When you started the trade and ended the trade, how many months did it take in the longest one that you've ever had that you can recall off the top of your head?
There's some that just never worked, Matt, and you had to just, chew your arm off.
I've had one of those. That was 2x6 spruce 2 and better that I bought that was supposed to go to a premium and it never did.
Right.
But that was the only time. That was
2012, 13.
Yeah, it was like a 2-year deal. It just was terrible. And I had one of those, and I wasn't the only one. I'm sure a whole bunch of people in this industry
everybody
did the
was
same
piled
thing.
into that trade. Yeah.
Right. And
crowded trade.
But that was the only time in 30 years that ever happened to me. And then to answer my own question, the longest I've ever had to wait a trade out is 6 months. And so, in general, we talk about cycles in the lumber business. So we have 6-week up cycles, 6-week down cycles. These are, kind of like a general rule of thumb. It's not a hard and fast rule. But then you look at, basis cycles too. And typically the longest you'll have to go is probably about 6 months.
But that takes metal. That takes metal, Matt, because I got a question. That 6-month one you did, how many times were you asked, what WTF are you doing with this?
I wasn't asked that at all because my boss at the time totally understood what was happening. And so what we did, we just kept rolling our hedges.
Yeah.
And I kept selling enough cash in, the stuff that I'd bought as a basis. I had sold, I was kind of nibbling at it, but the big pile was still there. So I was holding my prices at a level that made sense for the trade. And, we weren't getting steamrolled with orders, but we were getting some. what happened was this happened in 2011. So I'll tell you the trade. In 2011, I bought a whole bunch of 2x4 2 and better and 2x6 2 and better, random. I put it all on the ground, like 65 cars. I paid about 120 mil for it.
Yeah.
I sold the board at 180. And when I finally exited the trade, the board was 180. I mean, literally, the board didn't change for 6 months. The price of cash, it took 6 months for cash to go to 180.
Yeah. And right now the basis is great for hedgers, right? You just keep rolling and picking up money.
You just have to be patient sometime. If you're doing basis trades, like Gregg said, it's sometimes
what you can't have is you can't have hope. You can't have hope.
No.
It's emotion, Riley.
You can't have hope.
Ego death.
Greg, what was the thing you were? I
You don't wanna see-
missed
That's
out.
like, you're
That's right. Look at your phone, Beamer.
Charles is just like,
Let's
Look
Look
at
at-
your phone.
Look at my
you got it on your phone. You got it on your phone too.
Oh
But,
my gosh!
Cash,
All right. We got the Backstreet Boys bye. Emoji from Gregg that we got to get going.
Charles, I love you, man. I love you.
Hey, I'm always here for a
You're
good
the
time.
best.
Oh God!
You're the best.
So look at
I'm gonna go
everybody.
have lunch now.
Hey,
Appreciate it, Matt,
Guys.
Gregg, Charles. We'll look forward to doing this again next week. And thanks for listening to this week's episode of The Lumber Word.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.